Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So it's been a while since I've done a video. Let's talk about some Bitcoin today. Let's take a look at some charts I look at rarely on video, but I pretty much look at least once a week personally. This is lookintobitcoin.com. They're free. Philip Swift, good guy. Not sponsored or anything. I just really like the site. I like the charts. You can pull them up at the click of a button. For the most part, these are high time frame macro charts. So in the first half of the video, I'm going to talk about charts that I would generally use to decide, do I go to cash versus do I hold spot positions in BTC? And then the next half of the video, I'm going to talk about leveraged positions, buying the dip, that sort of thing, charts I would use in that scenario. So you may not agree with all of these charts, obviously. I'm not saying that I agree or disagree with all of them, but they're just good to look at. Just give your imagination some ideas of what's happening here. Give the possibilities some credit as far as what's going on, what's happened in the past, what can happen in the future. All right, we have the log growth curves first, and he's got a ton of charts here. I'm just going to highlight the ones I personally like the most. Log growth curves have captured the highs very nicely. They've captured the lows very nicely. Arguably, this was invalidated because we dropped out of the log growth curves. Maybe, you know, I don't care. There's just possibilities here. I'm not saying it's going to go to 100K, 90K, but the log growth curves historically have been pretty good at deciding where we go. All right, and it's up there, you know. This is like late end cycle stuff, not half cycle stuff. Another thing you're going to notice about all of these macro charts is none of them show we are late cycle. All of them show we're early cycle or mid cycle. Tons of upside, tons of potential for upside here. You can see how all of them looked throughout 2016, 2017. If you want to compare that cycle to this cycle, you can look at how it looked in 2019 when it basically reached halfway. And that's currently, what is that currently? It's like 33K mid-cycle. So that's just the log growth curve. Cool. Stock to flow. Hate it, love it, don't care. Upside is like 88 to 130, something like that, 120. Just to give you some idea, right? Because in 2013, right, I had no idea where price could go. People said some pretty crazy stuff. People are saying some crazy stuff now, like 100K, 500K. This is a way to sort of quantify it. Look at backtesting. Look at where it was in 2012 to 2020. Give us some idea where this could go if this is real. You know, if this trend is real, which I think it is, throughout 2022 to 2024. Puell Multiple is a great indicator to look at. Issuance, basically the amount of USD notional value it takes to hold price up at various levels. That's the way I think of it. So you can see we're about halfway-ish. If 4 or higher, we're at 1.2. So a little less than halfway as far as just bare basic looking at where were highs when the multiple was up here, right? Each time this multiplier, Puell Multiple, however you want to think of it, was pretty good at predicting highs. So using all these together, you can say to yourself, you know, maybe we are red on the moving average heat map. Puell Multiple looks like we're 4+, and stock to flow says we're at, you know, 90K. Maybe it's time to get rid of some BTC here and move to cash. If we look at the 2-year MA multiplier, another really good one, green line being the 2-year MA, red line being 5 times the 2-year MA. Historically, it's been pretty good at picking these highs, picking these lows. So right now it's at 40K. It's going to continue to increase. Again, we're not halfway there yet. So plenty of upside, plenty of potential. No real reason for me personally to move into cash ever for any reason. You know, unless we break 8, then you're talking bare doldrums. But if anything, then you just buy more, right? so 2-year MA multiplier looks good. MVRV is basically a measure of on-chain activity versus market cap. And again, it's picked these highs pretty well, pretty nicely. We are at 2375 has been the upper bound, so nowhere near even halfway as far as MVRV is concerned. So maybe make a checklist for going to cash, and it's like, okay, you know, is MVRV above 7.5? Is the moving average red? You know, you can use your imagination here as far as what you need to be doing for your own personal self, your own sanity, to take the euphoria out of the equation. What does the basic stats say here as far as, is this stuff a little too crazy right now? Something else I like to look at is the age of coins. Essentially what this says is as we get price highs, we get a lot of coin action on chain. Typically that's coins being moved to be sold, not always, but typically. And you can see currently we're at 7% in the 1 to 3 month. So the orange yellowish stuff is what I look at mainly. 1 to 3 month, it's at 7% of the coins, which is nothing. Historically, it's at like 15 when we're at the highs. Again, we're like halfway there. Just another way to quantify how hot are we on being overbought here. Add this to the checklist. You know, are the on-chain coins, are 15% of the coins moved in the past 3 months? That's a sign we are overbought, bubble high, probably gonna retrace soon. We're not there yet, not even close. Something else in the almanac we can use is the quarterly price changes. We haven't had more than 5 positive quarters. Something else you can add to your list. Q4 has been extremely positive. Q2 has been extremely positive. Q1 has been on average positive, but mainly had negative quarters, the number of quarters here. So leaning into January, I think it's important to calibrate expectations as far as me personally. You know, I don't expect a massive positive quarter in Q1. Even when they were positive, you know, after 2014, we're talking 10% or less on the quarter. Is this some US tax effect? Is this futures rollover? I don't know. You know, pick your narrative, doesn't matter. Just looking at numbers here. But Q2 should be massively positive historically. All right, so that was all this is what I'm looking at for cash versus BTC. Right now, comfortably in BTC, I could go in a coma for 3 months, wake up, probably still be fine, right? There's no warning signs that we're going to spill over into heavy retracement territory anytime soon. If anything, all of those indicators are screaming, it's super early. Give it time, have stamina, relax, go fly a kite, take up a hobby. You know, the last thing you want to do if you're not actively trading this is start to actively trade this, because psychology kicks in and the numbers kick in and you're like, oh, this is so much money or whatever, you know. Just don't let that happen to you, okay? Don't let it happen to you. All right, so let's talk leverage positions. For me personally, I like looking at high time frame averages. Where can I buy the dip on leverage comfortably, right? 5 to 10x leverage, where can I buy the dip comfortably? We can look at the 20-week SMA, and we can say historically, if we're in a bull trend, it's going to bounce on the 20-week SMA very cleanly, as it did in 2016, 2017. Something else you'll notice is typically between 50 to 70 days is what it takes as far as a bounce into the next bounce. All of these were also events. These weren't just like random retracements. These were all event driven. So something else to look for, if we get some massive bearish news, I don't know what it could be. I can't even think as far as what it could be. Maybe some China bans Bitcoin, which is what this was here. Maybe it's some encryption, legal regulation. I don't know. I don't know what it could be, right? Doesn't really need to be anything super important, but it helps act as a catalyst to hit this retracement target currently at 11.5. So is that super low? Yeah, will it keep moving up? Yeah, well, week over week, it'll move up a little bit. So you're currently risking missing out on any additional upside for being patient. That's the drawbacks here. Weekly Kijun is another great place to set bids, currently at 10K. We're starting to get the faint whiff of a TKC clamp disequilibrium, basically where the TK lines are spread apart and flat for an extended duration of time. It's just starting, so this could go on for 4 to 6 weeks before we see signs of retracement. And maybe it's like 2017 where we basically didn't get a single clean retracement target on the Kijun, despite several TKC clamp type stuff. For me, this is just about being comfortable with leverage at various levels. I'd be much more comfortable adding to a position at 11.5 than I am at 16, right? Just because on a weekly basis, we're running a little hot right here. Based on the Kijun on the weekly, we're running a little hot here. And something else I'm looking at on the weekly is the fractals. So you can just turn on Williams fractals, go to the weekly, super clean, treat them as trailing stop losses. Currently it's at 9.8. If we get any closes below 9.8 on the weekly level, we can say maybe this trend is in trouble. And we haven't had a fractal print in like 70 days. So we're at this point, we're looking for a fractal print within the next few weeks, which means we're probably going to get some sort of higher low within the next few weeks. And at that point, that's where I'd feel comfortable personally opening or adding to any leverage positions. If we look at the pitchfork, everything looks good for 18 to 20K as far as the R2 at 18, the median line for the pitchfork around 20 to 23. Price looks like it knows where it wants to go. It's really just a matter of time. Daily cloud, another good place for retracement targets is the daily Kijun, currently at 13. Again, you're getting a faint whiff of a C-clamp just starting to form here, just as it did in August. Usually it's pretty obvious. You know, people I think start shorting a little too early, but these have been fairly clear as far as the duration at which they were C-clamped or spread apart, disequilibrium. You know, the retracement typically doesn't happen immediately. It takes some time to establish these levels at 13. Tenkin currently at 14.1, something like that. So I like 10, I like 11, 5, I like 13 as far as levels for bids. Just put them there, forget about them. They hit, they don't. But at the very least, those are really good retracement targets currently. Something else you can look at for sort of stops and retracements is just basically diagonals off the higher lows. Because this is a kind of a parabolic advance, you just set diags at the lows. And if these start to fall, then you can say with greater confidence that, you know, we're probably going to hit 13. If this diag breaks over the next week, if price crosses over this diag and doesn't make another impulse higher, I'd say with increasing confidence that we're going to retrace to 13 at that point, or whatever the Kijun is. If you want to get really rowdy with it, you can look at the 4 hour and you can say, what I'm looking for on the 4 hour is a complete full rollover of cloud metrics from bull to bear. You know, we're not even bearish yet. So to me, I'm just sitting this out until this all resets. Then I can say with comfortability, regardless of price at that point, that this looks good for moves higher. You can also put bids here on the Kijun like you did on the daily, or like you might on the daily. Get this bounce. This is the ideal picture. You get this V bottom on the Kijun, this wick on the Kijun, and then it moves higher. Doesn't always guarantee higher highs, but it guarantees a nice trade, right? So let's say this M double tops and goes to 13, resets. You know, that's the ideal BTFD situation where you don't have to chase price, you don't have to FOMO into anything. Price comes to you, you're comfortable, you're up pretty handedly on any bounce here, pretty immediately as well. Very typically am I in a trade that doesn't make money if it's not right immediately. You know, if I'm in a trade and it's down for a week or two, it's usually not a good sign, right? Usually those aren't the winning trades. So that's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up in the comments below, and happy trading.